Today, Operation Blancmange. Well, again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. Well, blancmange is a sweet dessert which is gooey and made with corn flour. But frankly, that's how I felt when I read the RBA review document, which was released this week. Now, it's worth just thinking about this insofar that the current RBA charter is about the stability of the currency of Australia, the maintenance of full employment in Australia, and the economic prosperity and welfare of the people of Australia. But there's now a recommended new version, because it now says that the federal government should legislate that the RBA has a dual monetary policy objective of price stability and full employment, with an overarching purpose of providing economic prosperity and welfare for Australians. Duh. Does that sound particularly different to you? Well, it seems to me that in a way they are devaluing the economic prosperity and welfare of the people of Australia, but also there is a complete contention between full employment and price stability. So I'm not sure we actually take the argument that much further forward. Like I said, this feels like blancmange to me. So interestingly, the currency was replaced by price stability, which, by the way, is more or less how it operated anyway. There are actually more than 50 recommendations if you've got spare time to read them all. Believe me, I have, and it wasn't really a very powerful experience. A lot of words, but very new that's real. There are a few, well, maybe semi-significant ones, which is worth just reflecting on. So, for example, the RBA should explain its expectations about how long inflation is expected to remain above target, or how long labour market conditions are expected to deviate from full employment when those situations arise. But actually, of course, the discussion about full employment is pinhead and angels, insofar that in circumstances that vary, so does full employment. The second one they made the observation about was that the RBA should build a framework for the use of additional monetary policy tools in the future. Duh. Well, interesting, but actually remember that the one they've got is interest rates. The next one is that the Monetary Policy Board should comprise the RBA Governor, Deputy Governor, Treasury Secretary, and 6 external members with the Governor as chair. Then they said that the Monetary Policy Board should only meet 8 times a year instead of 11 times like the current iteration of the RBA Board, to allow more time to make better monetary policy decisions. Well, is less frequent better? Well, I suppose it means that there's longer between meetings, so they might be able to observe what's going on, but really? Is this really what it comes down to, the periodicity of those meetings? And then they recommended that the RBA Governor should hold a press conference after each decision meeting to explain the board's views. Well, pretty much all Western central bankers, from the Federal Reserve through to the Bank of England, or indeed even the Eurozone, New Zealand, of course, Canada, they all do it. So yes, the RBA Governor should absolutely do that. They should, of course, hold a press conference with questions from the press, and those questions should be informed questions, not like the Mickey Mouse, Dorothy Dixon ones that we get in Australia at the moment. The trouble is that most of the journos who ask questions are actually treading on eggshells and don't want to upset the boat. They went on to say the public statement after each RBA board meeting should be released and approved by members as a fair reflection of the decision and discussion. The statement should report unattributed votes. Also, the RBA should publish more of the information underlying the board's decisions, including detailed forecasts and assumptions and insights from business and community liaison. Board papers should also be published every 5 years. The RBA should further encourage diverse viewpoints and constructive challenge, including by advertising management role vacancies externally as a default. And the federal government should establish a governance board that is separate to the Monetary Policy Board that is responsible for overseeing the management of the RBA. So, honestly, breaking open the RBA's highly insular culture is a good thing, and so is more accountability. But actually, of course, all of this just merely is catching up with other central banks around the world. But in terms of real accountability, has this really changed? As I discussed with Robbie Barwick yesterday, I'm not sure it really has. This is evolution, not revolution. And I don't think that it would have altered the outcomes in recent years. The central banks that those changes are modelled on have already made the same mistakes, of course. And by the way, APRA continues to remain a bank-captured outlier. So it's going to be interesting to see if the changes promote any more honesty about the role of the third lever of Australian monetary policy, mass immigration. It was the failure to understand its impact that led to the bank's deflationary lost decade leading up to COVID. And one or two of those new appointees, well, will they help? It comes as the Treasury announces that former Fair Work Commissioner Ian Ross and former head of Australian Super Elena Rubin were being appointed to the board. Well, possibly providing additional understanding of immigration-related wages theft could help, but frankly, the policy statements on matters like this aren't necessarily encouraging. So, like I said, this feels to me like a big serving of blancmange. And actually, as I said with Robbie yesterday, the problem is that the government is stepping back a little further, removing underscore, the ability of the Treasurer to ultimately intervene on decisions from the RBA. That's a big concern because from a democratic process, we should actually have the elected politicians ultimately accountable. And the degree of accountability that the RBA, its board, and Monetary Policy Board will have remains sketchy at best. What if they get it wrong? What if they make bad decisions? Well, they can pretty much blame everybody else. This is, of course, exactly what they did. And if you look back over the last few years, they dropped rates too low, failed to respond quickly enough when things changed, and also threw massive amounts of liquidity at the banking system through the Term Funding Facility and other mechanisms. No accountability for what they did. And, of course, they're not alone. Most central bankers actually have very little accountability at the end of the day. So, more than blancmange? No, I think it's another serving of the same old, just maybe heated up slightly. But I'm not sure it's going to make a huge difference. And in fact, it takes us probably further from where we should be in terms of proactive management of the economy in the interests of the people. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.